Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 31st of July, last day of the month, Bull versus Bear webinar. Steve Miley here on the call for trade. Welcome to all the trade day team. Welcome, everyone. We're going to go through our usual regular run through in here today. We're going to take a look at the calendars, both the macro calendar, looking back and looking ahead for the macro data, macro events. We'll also be taking a look at the micro calendar. That's the earnings calendar, the earnings reports, what we've had, what we've got coming up. We'll run through some articles from the major news wires, looking at the various central bank, geopolitical, macro events that are impacting financial markets right here, right now, and a quick look at some of the technical charts. So let's kick off looking on the macro side back before we look forward. So yesterday we had the Fed. On with the Fed yesterday evening, they were slightly more hawkish than probably expected. No changes expected. Looks like kind of potentially ruling out, and the market's starting to price out now potential for a September, the next meeting in September, ruling out a September meeting. Cut and now pushing the cuts back further back into the year. So we'll take a look at that when we come to the Fed Watch tool shortly in here. And there you have the Powell cites inflation risk as Fed holds interest rates steady. Said interest rates are in the right place to manage. Continued uncertainty around tariffs in May, tempering expectation for a rate cut in September. So pretty much exactly what I said there. There are many uncertainties left to resolve, told reporters Wednesday. It doesn't feel like we're very close to the end of that process in here. So it looks like the Fed potentially on hold at the next meeting as well. US Treasury slump. Well, it says slump. They went down. It wasn't massive. More at the short end. Short end, remember, more sensitive to interest rates. Long end, more sensitive to the economy and expectations on the economy and expectations on inflation. So the shorter end sold off. So selling off on the short end. We'll take a look at that again on the analysis shortly. Short end went lower to actually new recent lows in price. Low prices, remember, higher yields. So potentially higher yields at the short end because of expectations of rate cuts not coming as soon. Moving ahead and looking into today, what we have in here, as we look forward into the US session, some important data coming up in here. This is yesterday's again. Where are we? That was yesterday's, right? Yeah, let me just get this right. So we'll go to today's. So we go into today in here. We've had some CPI data, but the final CPI out of Germany in here this morning, but final CPIs out of Germany. But really, winding forward to the most important data of the day in here is the year-on-year, month-on-month PCE. So the PCE, remember, data in here. Here we have core PCE price index. Okay, so in just under 1 hour, the PCE data, remember the personal consumption expenditure data, the Fed's preferred measure of inflation. So we'll certainly be keeping an eye on that. 2.7 and 0.3 expected on the year-on-year, month-on-month numbers. So in just under 1 hour, the core PCE data is the key data to be watching as we go into the day. We also get Chicago PMI later today at 9:45, so watching out for that as well. But the real main focus on the data side, the macro data today, is that core PCE data. Again, looking, where are we back before we look forward in here? So I've got that on today. So let's go here to yesterday. On the micro side, on the earnings side, we had Microsoft and Meta both after the bell last night. So the markets actually were lower yesterday on some concerns around some tariff. Remember today's tariff deadline. Tariffs due to go on tomorrow. So some concerns around tariffs, concerns around the Fed being less dovish, sent markets slightly lower yesterday. So stock averages were lower yesterday on both Fed, concerns around we're getting to the tariff deadline and tariffs going on copper. So concerns around that. However, after the bell, Microsoft and Meta put out some stellar numbers in here. Really strong numbers from both Meta and Microsoft, sending their stocks higher in the aftermarket and the pre-market this morning. So Microsoft and Meta both notably up, and that's taken the NASDAQ particularly higher this today and the broader indices. So focusing on that, NASDAQ futures rally as big tech's earnings deliver in here. Stocks rose as big tech earnings delivered on optimism around the AI boom, putting Microsoft on course to become the second company to reach a $4 trillion market cap. Microsoft, and highlighting Microsoft and Meta in here, here. The S&P up 0.9, the Nasdaq, this is obviously potentially old numbers now, but at 1.3. Microsoft Meta surged in post and pre-market trading, pledged to spend lavishly on AI, and reported upbeat earnings. So all of that very positive in here. And again, look, Wall Street futures hit record peaks as Meta Microsoft results get AI boost. So positive certainly coming through there. Microsoft's poised for $4 trillion valuation after solid numbers. Looking into the day, another two giants in here, two more of the Magnificent Seven. So four of the Magnificent Seven reporting this week, two yesterday, the other two this evening. Remember, after the bell as well. So Apple and Amazon. After the bell tonight, we get both Apple and Amazon. So going to certainly have our eyes on those. The morning briefing, America had an update in there. Let me see if I can quickly do that. By newest, by relevance. No, that's not it. So I'll just pop out in here, but this is the European one. Stock futures surge and robust big tech earnings. We know that anyway. So markets up on that. Copper, though, collapsing after Donald shocked the metal as well by exempting the most widely traded forms of metal from his hotly anticipated import tariff. So that's a positive. It was a positive on the copper side as well. Trump tariff deadline eve arrives. So this is the big macro event coming into the day. Now, a lot of the deals with the big countries have been done. The main trading part now. Let's say the copper market is reading with his move to go ahead with its tariffs and imports, but exempted key products. So the market down in here. South Korea now down a framework pact, including 50% tariff. So they're getting close and a lot. Last minute deals done in Switzerland. Will Trump extend the tariff truce with China? Trump and his Mexican counterpart speak by phone this morning. So these all in the pipeline now as we go forward in here. So this is going to be the key one of the key events today. Also, they got PCE data and also got the earnings reports out of Apple and Amazon. So we're keeping an eye on that. US copper plunges, Trump tariffs exclude refined metal. So that's certainly a positive. Morning B out of Reuters, mega caps boom, dollar surge cools. And just a quick run through what we've seen elsewhere. So 1% up for the Japanese Nikkei, but 1.6 down for the Hang Seng out of Asia. European markets, the UK FTSE up 0.5% in the DAX pretty much unchanged, and a slight dip on the French CAC actually by 0.2. But if we go to the US futures on the overnight in here, big gains, 1.25% up already on the Nasdaq, and 0.8 on the S&P. And that's despite the fact that there we're going on to the Fed Watch tool. You'll see now 62% chance that this was. We can go look at the historics, but this is leapt higher. This is for unchanged in September. We were looking for the reverse rate cut in September. If I just dupe this out, and we'll see in here, and I'll go to the historical in here. So I want to see the pricing in of the what was the pricing in of the rate cut, which is 400 for 425 on the September meeting. So if I go to historical for the September meeting in here, and then we go to the 400 to 425 and get rid of all of these. So this is for one rate cut. You can see collapsed in here, so we were trying to price in a rate cut. It was over, at one point we're up here, nearly 8% chance of a rate cut late June, early July. It's come lower, but then it was rebounding up and we were over 60% chance, and now obviously collapsed back lower in here. And now we've only got 37% chance of a rate cut in September. If we go take a look into October though, actually that's on the historical. Just want to go and take a look at the come back off on the current. If we go and take a look at October, you'll see now though we've got a 39% chance, still no rate cut by the October meeting, but we do have then whatever the balance is, 61% chance that we get a rate cut in October. And by year end, the market now only pricing in potentially one rate cut. So we've got either no rate cuts or one rate cut, 42, 50, more chance of only one rate cut now into year end. Now, the Fed had previously told us that we're looking for two rate cuts, right? So the market now is much more hawkish in here, much less dovish than it was in here, so more hawkish, so de facto less dovish, and it's only pricing in really potentially one rate cut between now and the end of the year. But stocks, even though they were dipped on that yesterday and dipped on some concerns around the tariffs, rebounding strongly after those the Meta and Microsoft numbers. So I'm kind of shrugging it off. Yields ticked slightly higher, as we said, at the long end, but it's really the short end where the market really moved in here after the Fed. So you can see in here 30-year and the 10-year moving back down, lower in price, higher in yields. But if we go to the 5-year, more significant sell-off, and the 2 years where it really happened, and making new lows for July in here. So that's, remember, and getting back to the lows seen this year. So that's saying the short end rates are as high as they've been. Okay, so low price, remember, is higher yields, and that's because of anticipation of no potentially fewer cuts between now and the end of the year from the Fed. And but equities, yes, we did dip lower. Yes, we were coming down towards this support zone in here. You know, Nasdaq was pretty flat, slightly lower, but more of a dip on the S&P, and that was a concern. But obviously now we're making new highs on certainly on the Nasdaq and up there on the S&P. So markets looking strong again and pointing north. And after those super strong numbers from Meta and Microsoft. So focusing back, recap on what we're looking at in here today, going into today. Where are we? So today, critically in now 49 minutes, the core PCE data. We're going to be watching that core PCE data. And then this evening after the bell, Microsoft and not Microsoft and Meta. We've had Microsoft and Meta. Where are we? Over here. Apple and Amazon after the bell tonight. And then in the interim, watching out, watching True Social, watching X, watching the social media, listening to the Squawk, dial into the Squawk, the Trade Day Squawk, free Squawk service. Dial into that Squawk service, listening out for any updates on any potential trade deals. Mexico potentially important. So, watching out for all of that going into today. Going to be potentially busy day with lots of volatility, with markets already up at all-time highs. All right, I'm going to be actually out for a couple of weeks in here, guys. You'll be in Duncan's safe hands. There will be a gap in coverage. Unfortunately, so there will be no webinars. I'm thinking it's between the I'm going to say the 7th through 14th. I think it's the 7th through 14th. We'll put a note here in the message in the chat box below. We'll also put something in the heads up as well in the members area, so you guys know you don't need to get up early and come on if you guys come on particularly early. So there will be a gap in coverage. Duncan will be covering in here for the next couple of weeks. I'll be back in the third week of August. Until then, I'm going to wish you all a great trading day. Have a great trading day. Watch out. There's lots going on today. Busy day tomorrow as well with the US employment report. Have a great weekend too. Have a great beginning of August, and I'll be back with you into the second half of August. Bye.